The information in this training course is meant to supplement, not replace industry standards or guidelines, investor overlays. They're going to vary from lender to lender. So I cannot guarantee anything. This material is for informational purposes only, even though I feel like I'm 100% right. Another underwriter, they might not. And it should not be relied upon for legal compliance advice, or I put mortgage processing advice, but I personally think that I am definitely give some good processing advice, but you guys get what I'm trying to say. Basically, this is just for information purposes. And I'll give you guys a couple of examples, hopefully, as we're going to just tell you some of the battles that my mentor group has been going through with some of the underwriters and lenders that they've been dealing with. So a little bit about me. So I started in the industry in 1995, and I know that sounds hard to believe because I look 25, but I have been in the industry for 27 years. I went from a marketing manager, which is just a glorified telemarketer, to a mortgage processor. And then from there, that was like 1996, I went from a mortgage processor to a branch manager in San Diego, California. I loved San Diego, but I had to go back home to Chicago. And when I got back home in Chicago, I didn't have a job anymore. So I had to open my own processing company. And then I began to train mortgage professionals. And lo and behold, somebody gave me an opportunity to start underwriting. But during this time, with me processing, with me underwriting, I even managed an entire processing team. I never stopped training. It's a passion for me. It's something that I absolutely love to do. And I've been doing it for, I can definitely say, over 20 years. Now, the information from this webinar, I have actually taken it from a course that I've written.
I did my stretch and I went like this, and
I
I was like,
am going to go ahead and mute everybody. Ooh, wow, radio silent now. Amanda, do me a favor and make sure that you can still hear me, because I have this fear of muting myself. I don't think I've muted myself. Cool. Looks like everybody can still hear me. So just wanted to tell you guys really quick. This information that I'm about to share with you is actually from a course that I've written called Underwriting Secrets Revealed. And in this course, the kind of course framework is about qualifying your borrower, verifying, investigating, securing, and packaging. But today, we don't have enough time to go through all of this framework. So I just picked some good stuff that I could fit into an hour inside that first one, which is qualifying character, which we know that character in the mortgage industry is credit.
Dion, as we're going, do you want me to watch the chats for you?
See, this is why I love you. Yes, coffee sister. Amanda is my fellow coffee sister. You guys are going to hear me call her that often. I would love for you to do that, because usually I have someone to do that, but I forgot.
No worries. I'll do it. That's
Appreciate
what CIC is here for.
I love it. And I love CIC Credit. Thank you so very much.
Thank you.
I could agenda together. I am going to get through this stuff as best as I can. I really pray that I'm able to get through all of it, because it's some really good information. And so the sections that we're going to go over the sections of the credit report as an underwriter would. I am not going to talk to you guys like you're in kindergarten and I'm going over credit report. We're going to look at the credit report as if you were the underwriter and I was explaining to you what I was doing. We're going to go over a few guidelines that accompany the sections that we're going to be going over. Nothing too deep, because we don't have a lot of time together. Now, just really quick, if you're wondering what this circle is right here with this line in the middle, it's a compass. I couldn't think of anything else to compare to guidelines. Next one, we're going to go over some trade lines that could possibly stop up your pipeline. All right. So I can't go through all of the possibilities, but I'm going to try and go through a couple of them. We're going to address the pink elephant in the room. And I'm not going to tell you about it until we get to the pink elephant. And then finally, if we've got some time, we're going to do some Q&A. Getting started. You're going to hear me say this a lot. Well, actually, you may not, because this is not the whole entire course, but bear with me. So we're going to review the credit report. And the credit report is the very beginning of your credit package. So we'll be going back and forth between these three documents. See, this is what I would be saying if we were going through the whole course, because all three of these documents, the credit report, the 1003, and the AUS findings, all of them have to match. And so you think of the 1003 as the loan origination system that you're using, whether it's Calyx and Compass, Open Close, Arrive, or whatever you use. You would, whatever something happens, whatever you update something, you're going to go in there and you're going to update that or make any type of change that you would make. And I'm showing you this right here because this is how underwriters think. We're not thinking just one thing. We're always thinking about every single thing at the same time because we're cool like that. We're able to multitask. All right, credit review. So let's go over this credit report. Usually I would say leave no stone unturned, but we're going to have to leave some of those stones turned where they're at because we only have an hour. So believe it or not, the first 2 pages of the credit report are a lot more important than you think. And so you want to review these 2 pages from top to bottom. Now, a good underwriter, so somebody like me or any of my friends in the mortgage industry, they do a thorough underwrite in the beginning. We comb through that file so that when that file comes back, we only have to review the conditions. Have you ever submitted a file underwriting, you met the conditions, and then all of a sudden you get more conditions that should have already been there before? That's because someone did not do a thorough underwrite, or they got distracted, or they were interrupted, or something like that. You forgot something. So that's why you want to make sure that you're reviewing your credit from top to bottom one time so that you don't have to keep doing it over and over again. And then my favorite part, you will review it and you're going to make notes. It takes a second to make a couple of notes. And once again, you're making these notes so that you're one and done. Now, when your borrower calls you, you're not going off your memory. You're pulling it up, you're looking at what you said, and then you're able to just keep it moving. So the borrower has entered this information in a system. And so you want to look at the borrower's name, social security number. You want to see if there's any name variations. There's so much that you want to do. And so let's go ahead and get started. So this is the first page of the credit report. And as you can see, we are dealing with Bart Simpson. I don't know if he's going to give us any problems. You're going to have to see as we go along. And so you're probably asking, why am I concerned with this first page? And one of the main reasons why is because the file number, the credit report date, and the credit scores are on this first page. 3 very important items to me. These items are important because these 3 items must match my AUS findings. And the reason why that's a big deal is because I am sure that there are about 5 or 6 people, if I ask you to raise your hand right now, that have had to repull credit for some reason or another or make some type of changes. But sometimes those changes don't get imported into that AUS. So we always want to make sure that all of this information matches. There's that AUS loan prospector, DU, it's not even called loan prospector anymore. Gosh, I just aged myself. Loan product advisor, they're LPA now. DU or GUS findings, which is what we use for USDA. Does this stuff match? Now, the last point brings up, how many scores does the borrower have? I definitely want to know how many scores that borrower has. Now, what if there were only 2 scores? Let's say that one of those scores was Frozen. Now I wish I had put a Frozen image up here, but people probably wouldn't really know unless they had kids and they had seen that movie Frozen. So the answer is yes. We can still proceed if one of the credit files is frozen. Now here's the thing that you have to remember. And maybe you guys know of a lender who does this, but I don't personally. But understand that most lenders will require that borrower to unfreeze that account at some point so that they can make sure that there is nothing serious underneath there that they're hiding. And I know it frustrates the borrower, but the really good part is that if they do it online, I think it takes 30 or 45 minutes or something like that. So highlighted here near the bottom, it says we are giving guidance for these people. It says loans for borrowers with a credit data at 2 or more credit repositories will not be eligible for DU. Frozen credit score requirements are found underneath here. So inside of my course, I'm turning around because I have two screens. So in my course, when I'm talking about guidelines and when I'm talking about anything that's referred to in the guidelines, I'm going to always put your click path right here. And the reason why I do that is because the whole purpose of me telling you is so that you can always do what I'm doing when I'm not here. Okay. So you're going to see that in some of those, and that's why those are there. So I'm leaving credit. I'm leaving frozen credit right now. We know that when we're dealing with frozen credit, we need at least 2 scores. Ooh, I think, did you raise your hand, Amanda?
Yeah, so just a couple quick questions. Sorry, Dion, I'm going to keep it short. One was, can a borrower's credit be frozen unintentionally? And the answer is no, not normally. I have, however, seen, because it's the bureaus, that they accidentally froze a son's social security number or file as opposed to the dad. They had a similar name. They lived at the same address. So sometimes it can happen. In my 27 years, very rare, maybe 2 or 3 times. Then the second question is, do you have to request that CIC unfreezes the credit? Essentially, we don't unfreeze it, or your credit vendor doesn't unfreeze it, your borrower does, but your credit vendor will have to go back in and re-pull just that one bureau. And you can do that. Most of the systems have a button on their website where it's unfreeze, frozen, or locked file, and you can do it right there. So that's just to answer some of the questions. Go ahead, Dion, sorry.
No, that's good. I like that. Those were good questions too. Oh, wait, I lost your face. Hold on. There it is. I got it back. So top of page 2. So we know that first page had a little bit of information. And so this top page has the lender information and the applicant's information. Amanda, if I say this wrong, don't judge me, just let me know. So wait, where did I go? Oh, I'm right here. Why did I leave that page? So I'm here at this page. So Amanda, this information right here, where we have the borrower's name and the borrower's social security number and the current address, they're pulling that from what the borrower has entered into whatever system that they're using to run that credit report, correct?
Well, at the top here on this CIC sample credit report would be the information that the broker, the loan officer, the processor entered in, typed in to see that information. As you go down a little bit into your source of information, which is just a little bit further down, that's the stuff coming back from the bureau. That's what you want to match up.
Cool. With that being said, this right here is your responsibility. Tell me, what do I mean by that? What do I mean by that is when that application comes back, when that borrower does that, and I have this really cool feature in my classes where application comes. So when that application comes, we always want to go over that information with the borrower, because I don't know if you noticed this, but did you guys see that Bart actually put his name as Bart, and his name is not Bart. His name is Bartholomew. Just a little trick question there. So this information is extremely important. We want to make sure that address is correct. We want to make sure the borrower's name, full name, legal name is up there and correct. All right, source information. This is what Amanda was just talking about. The name, the date of birth, and the social security number. I am looking at all of this information. Let me tell you why. This is a trick question on one of my case studies. And I want to see if anybody from Experian, TransUnion, or Equifax, do they see any differences? And I'm asking that question directly because we don't have a lot of time, but I just want to see if you see any differences between these 3.
The date of birth on Equifax.
Anything else?
The name variations.
Yep.
3 different ones.
3 different names. And we also have a different social security number. This one right here, this says 788, that says 788. If you're not paying attention, you'll walk right, well, you won't really walk because you're sitting down reading the credit report, but you'll pass right by there if you're not paying attention. So the source information section gives you what each bureau is posting as the borrower's name, date of birth, social security number. So you want to make sure that you review this section, because if you see any type of variations in the social security number or the date of birth, you will need to document this and you will have to get it verified. Do you guys, Amanda, I make up names all the time for stuff, but your correct name for what I'm trying to say.
So if they needed to do, there's not a supplement essentially to fix this type of problem, because this is coming direct from the bureaus. The borrower has to go through the process of disputing this with the bureaus. This is another really important reason why people are pulling soft pulls or pre-qual reports first, getting that information and see what the bureaus are listing in case there's anything that needs to be fixed or changed. So I cannot fix source information. I can fix social, a wrong name, a date of birth, as long as the source information coming in is correct.
So what we would do in the underwriting world, Jody, what is that thing that processors pull when we're trying to re-verify someone's social security number to make sure it's correct? You know what I'm talking about? I can see it in my mind and it says SSN verified. I'm talking about
The SSA 89 form
I,
that you request.
I think so.
SS 89.
Yes. So
'Cause
that's
what I get sometimes is probably this, because I've never really looked at that so in fine detail like that. So I like that you're mentioning all this. But I've had them come back and it's like either provide an SS 89 or a copy of their social security number or a W-2 that has their full social security number.
this is the reason why. And I don't know the proper name of it. I just know that when I review my file, I need it in there so that I can verify that that social security number is correct. Now, I do know that you can actually provide the social security card too. Some brokers will do that so that they're not adding any extra expenses or whatever have you. But most borrowers, this is a really different generation. They will not give up that social security card for anything, even though we have everything already, but they won't give up that social security card. So, all right. So I just go through source twice. I did do source twice. It's because I loved it so much. I really wanted you guys to remember source information. Oh no, I know what happened. My public records is gone. Oh, that makes me sad inside. So let's pretend we just got through reviewing Bart Simpson's public records. He had none, by the way. But I just wanted to go over something with you really quick. And this is what I go over in my class. Do you see these two click paths right here? These two click paths take you to what the bankruptcy and foreclosure, deed in lieu, and charge-off requirements are. Now, Fannie Mae goes by years. That's why there's years right there. Freddie goes by months, all right? But I wanted to share something with you that has changed over the years. Once again, I am dating myself, but before we move on really quick, because of the changes, Amanda, they don't show judgments on credit reports, but they still do show foreclosures and bankruptcies, right?
Yes, ma'am. So liens and judgments, obviously they have to hit a 4-point guideline essentially. So if it doesn't hit all 4 pieces, which is name, date of birth, address, and social security number, then they will not be on the credit report. You'd have to get a separate lien and judgment report.
Cool.
Correct.
I'm gonna tell you guys something. When we were growing, when we were in the industry, we would ask questions, well, what is required for an extenuating circumstance exception? What led to that? And people like underwriters would literally say, I think that's probably why I'm such a nice underwriter, is because underwriters would literally say an act of God. They just would not give an exception. But over the years, guidelines have relaxed and they actually talk about it now. That was not in the guidelines when I started in the industry. Even 5 or 6 years ago, I can think of. I don't remember seeing this in there. So the click path is a little bit, the click path doesn't have the entire address. So I click that number up there so that you can see it. But keep in mind that extenuating circumstances are non-recurring events that are beyond the borrower's control. We are looking for events that can be documented. So, and here's a good example. An example would be someone loses their job. They are not able to find another job. So how would they document that? They would document that with the separation papers or unemployment. They could illustrate the documentation to show that they were unemployed until the benefits were exhausted and they still couldn't find a job. Because remember, when you apply for, well, you guys probably don't know this, but when you apply for unemployment, you have to continuously look for a job for those benefits to continue. So it's just a really cool way for you to be able to, it's not cool that someone lost their job. I'm just saying this is a good way for you to be able to document an extenuating circumstance. We can't tell if we're going to get laid off. We hope that we don't get laid off. I've never been to an interview where someone said, "Hi, I'm going to hire you, but I'm laying you off in 10 months. No one starts an interview like that. So it's definitely something that they don't know or it's non-recurring. So we talked about bankruptcies, we talked about foreclosures. Let's talk about reestablishing credit. We're still inside public records. Even though BART doesn't have public records, we're going to talk about public records for a little while longer. So this is another topic you don't really see discussed, but Fannie Mae does have guidance on what the requirements are for reestablishing credit. Now, I added this because I wanted you guys to see that the number one thing on the list for reestablished credit is the waiting periods and the related additional requirements are met. It's important to have real conversations with your borrowers. No one wants to tell you about the crappy time in their life, and that's understandable. But if you can connect with your borrower in the beginning and let them know that you're going to work with them until they have the house they want, the cash out, the second home, or the investment property, they might be more open to tell you the truth. And so this guideline is located on the same page that I mentioned before with the significant events, but those waiting periods are so very important. And I know that inside my course, I actually show you where DU or LP would give you a message that talks about they saw something or whatever have you. And as smart as DU is, it can't really read how long ago that bankruptcy or that foreclosure was. So you can still get an approved eligible and they're telling you that there may or may not be some type of bankruptcy or something out there. So you've got to be careful with those waiting periods. So quick review of pages 1 and 2. All right. That applicant and that borrower information. All right. Up here at the top, this is the information that you want to make sure that you check, because this is the information that the borrower is putting in, and then you're putting that in so that you can order your credit report. You want to make sure that it's correct. The source information is important. Why? Variations are located in there. The variations in names, social security numbers, date of births, that is all important. We always want to reduce the number of conditions that we're getting. I didn't really talk about the score model too much because I saw the scores on the other page. And oh, look at, you can see the public records. See, BART has no public records. All right. This is the perfect example of comparing documents. I know it's a lot of information, so just bear with me for a second. So what we have right here is a snippet of the guidelines at the top. We have a copy of the trade line in the middle, and we have the application date, January 18th, 2023, under the trade line. And then coming in last is my favorite thing, those click paths. Tell you where to go to find whatever this guideline is, okay? Per the guidelines, on the date of the loan application, the borrower's existing mortgage must be current, which means that no more than 45 days may have elapsed since the last paid installment date. And in this case, the installment being, of course, the mortgage. Now, this does not meet most lenders' overlays, as they typically like to see the most recent payment. Now, with that being said, if you look at the application, which reflects January 18th, 2023, you can see that we are way past 45 days. So what is my remedy for this? If you can, ask them for a mortgage statement. Now, I have borrowers who cannot, for some reason, navigate the system that holds their mortgage. And so where Amanda comes in. Amanda, you want to take over?
No. Yeah, so how does that? So really that's where you can order a supplement through customer service, through any CRA that you're using to get information. It used to be a little bit more simpler, right? We used to be able to get that information off automated tellers. There are a lot of systems that still do that, but there's some mortgage companies that require that you call verbally, especially if that account is running past due. So you've got to get the borrower on the phone call with you. That can be a little bit more complicated and often a bit frustrating for your borrower, obviously. And especially often what happens is we hear borrowers say, well, I'm a new mortgage, and so I didn't make my mortgage payment. heart attack, right? So just remember to continue. And I know everyone's really good. Keep reminding those borrowers, just keep doing everything the same. Just keep
Swimming.
make your payments. But it happens a lot more than you would think, that we go to call and it says, oh, this is, the payment was actually made in November because they started applying for mortgages, and heard somewhere that they will skip a mortgage payment. And so they've decided to pick which mortgage payment that would be and skip it.
I did not plan that out, but you could not have said it better. The reason why this is so important, the reason why I am pointing this out to you, is because you would seriously be surprised that sometimes that last payment is literally because that's the last time they paid their mortgage. So it's so very important when you're looking at these trade lines to look at these DLAs, date last actives, when it was reported. I would even say, look at the months it reviewed. We're 70 months here, so this is probably not a really, really good example, but sometimes you can see if they've got new mortgages, which let me tell you, thanks to old COVID, everybody's got new mortgages. So.
Yeah, and that's a really good one, Dion, because you need to have customer service go in and try to tie those together. Often make a comment on the trade line, sold or transferred from ABC mortgage company to this, so you can see where it's picked up and off. But that, you're right, since COVID, that happens a lot more than it used to. Oh, we have a question. So quick, somebody says, why the date open different than the date reported? So in a trade line, it's going to say, here was the date that it was open. So this account was open, and I'm guessing that you've got up on the here.
I can go back to the last one. Here we go.
Okay, thank you. So in this one, it's the date was open December 1st of 2016. That's the date that they made their first payment, or that this actual took a mortgage loan. And the date reported is the date that they are reporting the information. So the date that this was last reported, and then you'll have a date of last activity also. Do I not see that on your sample report? Your arrow might be,
It's
oh,
not.
right there. It's pointing at it, sorry.
Mhm.
So whereas the date of last activity was October 2022, if the date reported is December of the year 2022, they are currently reporting SPCU that they have not made a payment. I mean, that's a reporting.
Yes.
Sometimes you'll see that they haven't reported, but here's a really important note for people who are repulling credit, waiting to see if things updated. If you are looking at those dates reported, that's telling you when the information from the creditor was sent into the bureaus. And you can repull, let's say it's sent in this case, December 1st is the day that they send their information. So they send it the first of every month to the credit bureaus. If you want to repull credit to see a score go up, if something new has reported based on this trade line or a new payment has been made, you would want to pull it after the first of the month so that it's had a full 30 days to report, then you would repull credit. So there's a lot of pieces of information. This is also really good if you're ordering rapid rescores, because you may not need to order a rapid rescore, which I know that's slightly off topic, if the file is just going to update in the next 3 days. So look at those dates of reporting.
That's
Go ahead.
really good. I think I'm going to call you so I can add that to my training class.
I have a quick question. You say, going off of 12/1 and date of last activity. So SPCU is showing basically they haven't received it in 2 months. How come there's no 30-day lates marked here then?
Right.
Good question.
The answer, the short of that answer would be, this is a sample report, and that's probably why. In a real live report, you should see that. But you also have many creditors that are reporting a month or so behind, right? And that late just hasn't shown up. And why it wasn't sent in on the data tapes on the 1st of December as opposed to January 1st. That's why all of these little surprises will sometimes pop up. And it is so frustrating for everyone involved. One of the other things that you can do in this sample report, you see that there's a source, and it says XPTUEF. In my credit report, you can click on the blue link, it's live, and it's going to open up the trended data for you. trended data is that thing you paid all the money for like 5 years ago when I had to add trended data to their credit reports. And what it will actually do is it will break out how each individual bureau is reporting the information. So when you're seeing a credit report, you're getting 3 bureaus inserted into one piece of information, and we're taking the majority and putting it on the front of that credit report. If something pops up for you on the back end, and I'm sure Dion will talk about this more, sometimes they'll say, late, there is a comment somewhere. You can open up that trended data and find out which bureau is reporting it specifically.
So
and
what usually happens is, Amanda said before, they're behind reporting those. And so that's why we have these situations where we have this credit report. Because you think about it, if you pulled this credit report, say for instance, you put this credit report December 31st or January 1st, but not the company didn't file that middle or the end of January, then no, it wouldn't be on this credit report. So it's really, really, really important through reports.
And sometimes the department reporting balances is not the same department reporting lates. It would make sense. It would make common sense to do it that way. Just assume there's no common sense. So sometimes it's a totally different department that's like, oh, we send our information to 45 days late, and so it'll show up in a month over on that side. It's very odd.
It's the truth.
How creditors do it. Yeah.
Now, Amanda talked about connecting it with mortgages a little while ago when we were just talking. And so the previous mortgage history is also super important, especially now. People are still referring. I'm sorry, there is a wasp and I'm afraid it's going to sting me. That's why the cat was up behind me a while ago. He's trying to get to it. There's a lot of there's a lot of refinancing going on out there. There's a lot of scrambling going on out there right now. And so you're going to have to put the pieces together to kind of find out, okay, how do I have my funds? Because Fannie, Freddie, FHA, everybody has a certain amount of money they want reviewed. And although this one right here is closed, you're going to see in the next slide that the next example I'm going to show you, it doesn't really show the whole entire 12 months. So you look at Chase. So if you have a credit report and you're kind of like on page 1 of SPC, you could be on page 4 or 5. And because it says closed, for some reason, no one looks at the closed or, the ones that have us. Okay. And so now I'm short. And so if I'm underwriting this loan, I am going to ask you, what happened to my other 2 months, 12-month history to review? Amanda's raising her hand.
So I just want to make a quick about that, or a question, Dion. So in my line of work, we'll have a lot of people call and say, I just need you to add 2 months. We obviously can't do that. But for us, at least, the date that this trade line opened, you do not make your first mortgage payment for 2 months after that. Do underwriters think that as well? And
It could be 12 months. So that means that you got to go back.
Wonderful.
And they would come up with like mortgage statements or whatever have you. There's different ways that you can do it, but we need that 12-month history.
Yeah. And a lot of people will from that open date for us. And when we call to get that history, we're like, that's wonderful. This was open in October of 21, but they didn't actually make their first payment until January of 22. There is not 12 months. So just know that is an industry standard. Most people don't make their first payment for the first 2 months.
Yes,
Okay.
I am. Let me see, multiple cards. Okay, where are we at now? Oh, look at that. I forgot that was in there. So alternatives. We talked about alternatives. We talked about credit supplements. We talked about a regular verification of mortgage. Jody, have you ever ordered a regular verification of mortgage before? Like I rarely see except for once.
No, I usually do something through CIC where I'll ask for a mortgage history, but I've never requested this personally. I've done it for verification of rents and stuff, but never for.
The only time I really see a VOM is for private ones, like if it's like somebody holding like private mortgage, but you don't really see verification of mortgages anymore. I do see a lot of these, okay? And the reason why I have the blurry is because it's 2 types of these that I see. I either see them go into their mortgage companies. So I'm with Navy Federal. They'll go Navy Federal, and then I'll print out all the payments I've made to this or Navy Federal. Go to my bank statement and I'll filter Navy Federal Credit Union payments, and then all of those payments will show up. And as long as it's got all this identifying information, what's identifying information, Dion? I'll tell you. It is the mortgage company, that mortgage account number, like those last four, the time frame that they searched. As long as we've got all of that on there, I can use this as an updated mortgage history because it is third-party information. You went, you printed it out from somewhere. What I don't like.
Are you, I want to know if this is something I primarily deal with this with one lender, and I haven't run into it with anyone else, but are you requiring a verifiable URL listed at the bottom of the page?